We are live, guys. Welcome to the Denver Metro Real Estate Market Update. We've got some interesting things to share with you today. Some unforeseen market activity that is occurring with rates, and due to that, we're seeing some shift in the market that you need to know about. Whether or not you're looking to buy or sell here in Q4 of 2024, you're gonna want to watch this because these changes with rates really do make a difference in your overall experience in buying, selling, in what you'll be able to achieve in that space. So let's go ahead, as I usually do, and share my screen. Guys, you're going to get a behind the curtain look at what I'm looking at on sometimes a daily basis, if not a weekly basis in terms of stats, data, etc. So first thing I'm going to show you is going to be this article on CNBC. Weekly mortgage rates demand tanks 17% after interest rates hit the highest level since August. So just as we see rates come down at one of the lowest levels that we've seen in 2 years, in a short order of less than a month, we're back up to highs that we saw in August. And so when this says weekly mortgage demand tanks, that's exactly why. It's because buyers are seeing higher rates even after they just dropped to a 2-year low. And because of that, they're not applying for mortgages anymore. And so just as we get better affordability in the market, it's taken away from us. And now it says mortgage rates are back nearly 6.5. Will they stay there? That's to speculate upon. We'll maybe touch a little bit on that today. But I think the biggest thing that I wanted to talk with you guys about is what this all means in terms of rates going up or rates going down, how you should think about the market, etc. So let me first just give you some back-end information before I show you charts and then get into, as a buyer, as a seller, investor, what to be looking out for in this market. First things first, rates were really in a good downward trend over the past really 2 to 4 months. But more particularly in August, going into December, people were expecting, the market was expecting that the Federal Reserve was going to lower rates. And so because of there being some optimism around rates being lowered, you saw mortgage rates decline and bake some of that speculation in when it came to how much rates actually improved. And so what happened is we saw rates that were in high sixes to mid sixes go all the way down to what I believe was our lowest, roughly around that 5.5% range. Now, guys, 5.5% interest rate on a mortgage is actually quite good, especially considering that in 2022, 23, we reached high sevens. And so with all that being taken into consideration, what I'm going to show you here shortly is how interest rates actually affect the market. And I think you're going to be quite shocked with how much of a change we experience at the market level when rates go up or down. And then after we show you that, I'm going to give you some general insight and encouragements, maybe some things to look out for as you look to purchase or sell your home here in Q4 of 2024. And then going into 2025, what maybe you could expect. So let's dive in. Let's get to the data. Going into my market brief, I got to share the screen for you guys. So go into this brief. I'm not going to go over all of this, but I want to read a couple short paragraphs here and show you some charts. So since April 25th of this year, interest rates have been on a significant downward trend, dropping by more than a full percentage point over the 4 months of May through August, hitting a low on September 16th, right before the Federal Reserve met on the 17th. But in just 8 days, guys, between October 3rd and October 11th, interest rates moved from 5.5 on a conventional 30-year fixed loan to over 6.125. Why is there so much volatility in rates moving more than a half percentage after they just decreased to a 2-year low? What are they doing here? Why is the market acting in this way? Finally, us buyers get to breathe a little bit. We finally get rates that are much more reasonable in terms of the affordability, and then they hike up again. Well, what does that do to the market? I could get into why the economy is doing that, why we're seeing interest rates move, but the summary version is this. Here's a little bit of what happened and what it's going to do to you. So first things first, here is the graph, the chart on rates. As you can see back here, April, they kind of peaked going into May, and then from May all the way down to September, we hit our bottom here and hit a low rate. And as a result, what we were seeing is median price range was going up because mortgage rates hit 5.5 and they were going up. The time it took for a house to sell was going down. The amount of concessions a seller was giving a buyer, seller paying the buyer's closing costs, was going down because generally their buyers were using those funds to pay down the rate. Well, the rate has already improved so much. So you were starting to see less concessions and the market was starting to heat up and do it in a way where we were at all-time highs in certain data from a seasonal perspective. The median days on market right here, you'll see was going down. It was taking less time to sell houses because if we look at somewhat of a high over the last 3 years of how many buyers are actually out there looking for homes, that's because rates started to decrease. It was becoming more affordable for buyers to buy. And as it was becoming more affordable, more buyers were out there looking, right? And so you're having more showings occur. But when rates go up, you have less showings. And if we go back to 2022, if you remember the beginning of 22, we were still at rates in the threes, even in the high twos. So we had an incredible amount of showings. And then rates at 6%, I want to say that was probably June. And look at the showings. All the buyers went into hibernation. They disappeared. And you saw showing data decline. And so as we see rates go up, homes become more affordable, less buyers are in the market. And that's what we're seeing happen. And so even in a short period of time, guys, I'm surprised about this. So check this out. The past year, average sales price hit $690. Now, the last time I did my live, you saw the average price was $653. That was streamed 2 weeks ago. So just in the 2-week time span, really data lags. It's really over a 4-week time span. We went from $650 all the way back up to $690 and gained all the pricing we lost and got back to the highs, even a little above where pricing was at in August. Guys, that's because rates dropped